Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going to be reviewing M1 Finance going into 2020 and why I think it's one of the best robo-advisors and traditional brokerages. It's kind of like a hybrid for beginners to start investing, okay? We're going to talk about what it is. We're going to talk about its unique pie and slice portfolio system. We're going to talk about pros and cons of the platform. We're going to talk about a live demo, and I'm also going to give it the Marco score at the end of that demo. And for those of you that are looking for a little bit longer format that really want to decide if this is for you or not, I've actually taken the time to create about a 25-minute free training going through all the nuances of M1 Finance, from starting your portfolio to picking your first investments. So if you want to take part of that free training, check out the link in the description below. So without further ado, let's get right into explaining what M1 Finance is. So what is M1 Finance? M1 Finance, you may have heard of it. I personally use M1 Finance as my brokerage for my own retirement account, my SEP IRA to be exact. And again, I'm putting my money where my mouth is, and I have firsthand user experience, so I can review M1 Finance objectively in an unbiased way. I'm not getting paid to review this. I'm just trying to give you all your options out there. So M1 Finance is a robo-advisor and traditional advisor kind of mixed into one. So it's a traditional brokerage model with the robo-advisor aspect, meaning that you can still choose your own investments, except that they automate it. So it's kind of like a mix between like a Vanguard and a Betterment. And in my opinion, this is the best of both worlds, especially for beginners who want to start investing. So what they do is they give you a weighted portfolio. So when I say portfolio, think of a pie. And within that pie, which I'm going to go into, but just for a quick example, you have different slices. So picture these 4 different slices. This could be Amazon stock, Apple stock, it could be a Vanguard ETF. There's a million different things that you can invest in with M1 Finance, and I'll go into that later. So you can add different weights to these slices, meaning that if you want 99% of your portfolio to be invested in Amazon stock and 1% in bonds, M1 Finance is automatically going to weight that and invest your money accordingly. So it's really a nice hands-off approach to investing. The best thing about this is that there's absolutely no fees. It is 100% free to use, and you only need about $100 to start. Okay. Now, they also offer a debit card, which I believe earns about 1% cash back on all purchases. They also have a checking account, which is all digital. It's FDIC insured, and that gives you 1.5% annual percentage yield. And they also have a lending arm. So say, for example, if you have a minimum of $10,000 in your M1 Finance trading account, you can actually put that on margin and borrow from yourself, paying M1 Finance at the time of this recording 3.5% or 3.25%. So say you need a car loan, or say you need $3,500, you can take that out of your $10,000. It'll stay in the margin account, and you can actually pay interest on that $3,500 that you borrowed. That's not the point of this video. The point of this video is to talk to you about the different ways you can invest with M1 Finance, but that is another nice little added bonus. Okay, so M1 Finance's biggest selling point is that they simplify investing to the point where anyone can use it. It's very simple. They do this by creating what we call pies. So think of, you can have any number of pies in your portfolio. I like to keep my SEP IRA, which you'll see here at the live demo, just in one pie, and all the slices within those pies are just individual securities that you're investing in. Those could be ETFs, index funds, stocks, funds, anything in there. The only thing that M1 Finance does not have is mutual funds, okay? So the nice thing is that they don't tack on additional fees, okay? So if you're investing in a Vanguard ETF where the expense ratio is, 0.08%, for example, M1 is not going to tack on top of that. You're only going to be paying what the expense ratio is of the fund that you're investing in. So if that sounds kind of high level, let's just simplify this. So pretend this is your first pie, okay? We'll call this Marco's pie. Marco's pie, smiley face. And I want to invest in 4 stocks to start off with. I would never recommend investing in 4 individual stocks, but just for the sake of simplicity, let's use Microsoft, MSFT. Let's use Amazon, AMZN. Let's use Apple, AAPL. And then let's also use Tesla, because that's all the rage these days. So what you can do within this pie is that you can actually add weights to what individual asset you want to purchase. So as you can see here, these are 4 individual slices. So each one of these slices is 25%, 25%, 25%, 25%. I can weight this portfolio however I want as long as it adds up to 100%. So say I want 97% Apple and 1% Microsoft, 1% Amazon, 1% Tesla. What M1 Finance is going to allow you to do is, say for example, you have $1,000 to invest, okay, and they go into Marco's pie. If these are all 25%, every time I deposit money and have auto-investing turned on, $250 is going to go to Apple, $250 is going to go to Microsoft, $250 is going to go to Amazon, and $250 is going to go to Tesla. Makes sense? Now, what the cool thing about M1 Finance, what it does is it allows you to buy fractional shares, and it also dynamically rebalances your portfolio on its own, okay? So fractional shares. Everyone knows that Amazon's share price right now is roughly $2,100 per share at the time of this recording. So you're probably wondering to yourself, well, if you're only depositing $1,000, how can you possibly buy, this Amazon stock? You can't afford it. Well, M1 Finance trades 2 times a day. They have 1 block in the morning, 1 block in the afternoon. These fractional shares allow you to buy $250 or 25% of your initial investment, whatever the equivalent that is of Amazon stock, okay? So that's pretty cool. You're gonna get $250 worth of Amazon. It may not be a full share, it may be something like a fraction of it. However, you're still owning Amazon stock, which is pretty cool. Now, what is dynamic rebalancing? So dynamic rebalancing is you're gonna assign these target weights. You want 25% of your portfolio Amazon, you want 25% Microsoft, et cetera, et cetera. So what happens if Microsoft has a poor earnings report and their stock tanks, but Tesla is kind of shooting through the roof like it has over the past couple of weeks? So M1 Finance, the algorithm is smart enough to know that, hey, Marco wants to keep a weighted balance of roughly 25% of his portfolio in each one of these stocks. So it's going to buy less of Tesla the next time you go to invest money. It's going to buy less of Tesla because this has a heavier weight in your pie. And it's going to buy more of Microsoft to keep that equilibrium. Does that make sense? So this is pretty much M1's pies in a nutshell. So what we're going to do is move on to the pros and cons of the platform before this review gets too long. And then we're going to go into the live demo. Okay, so now that we join me for the pros, let's go over these real quick, some of which I've already mentioned. And if you do feel that M1 Finance is the platform for you, please use my affiliate code in the description below. It comes at no additional cost to you, and I do get a small kickback. These reviews are 100% objective. They're not paid by anyone. I'm not getting paid to do this, but I do choose to do these reviews for free. So for my time and effort, if you do decide to open up an M1 account, please use the link below. So let's get into the pros. Number one, especially for beginners, is that there's no fees. So as your portfolio grows over time, typical financial advisors, they're going to charge you 1% to 2%, which is incredibly expensive, especially in this day and age where most of this stuff can be done by a beginner, okay? You don't necessarily need a financial advisor unless you have heirs, trustees, you're mega wealthy, ultra wealthy. But for the average middle class person or lower class or upper class, you can do a lot of this stuff yourself. So instead of paying these fees, these are gone. And as your portfolio grows over time, you're going to be saving tens of thousands of dollars per year once your portfolio gets into the 6 and 7 figures, okay? Number two is fractional shares. So pretend you're the 19-year-old kid who's working a summer internship. You got maybe like a couple $100 in the bank. You can still invest in companies that you truly believe in, like let's call it Amazon, for example, whose shares are very expensive. You can still invest in Amazon using M1's fractional shares, okay? That's a huge advantage to people that want to get skin in the game in the market. The third is expert pies. So I didn't mention this in the previous section of the video talking about the pies, but M1 actually already offers you pre-made expert pies, and you can choose to base your whole portfolio off that, or you can choose a fraction of it to be just a slice within your portfolio. The flexibility is incredible with M1. So these expert pies, they fit into many different categories. You can have retirement, you can have income, you can have general investing, and I'll show you that in the live demo. But these expert pies allow for huge diversity and diversification within your portfolio. The fourth one we're looking at is dynamic rebalancing, which we've already talked about. It is a pro, but it also is a double-edged sword. It is a con as well. So let me explain. If you remember in my previous example with Microsoft dropping and Tesla increasing, what if you have some like crappy penny stock in your portfolio and you're investing $1,000 a month? Well, when the crappy penny stock tanks, a majority of that $1,000 is going to go to bring up that penny stock to your target weight that you have it set as. So instead of it going 250, 250, 250, 250 into those 4 equal slices, it may be 800, 50, 50, 50, or whatever the math is on that, okay? So you may want to be careful about having some dogs in your portfolio. And you can always turn off auto investing off, but I keep it on just because it's easy. It's set it and forget it. And then finally, no minimum deposit. So going back to the example of the young kid who has the summer internship, doesn't have that much money, he can still get skin in the game with no minimum deposit. And I believe the minimum to start investing is $100. And then the minimum after that is $10. So say, for example, you get some dividends back from your portfolio. If you have auto invest on, that $10 is automatically going to get distributed, just like that $1,000 was in our previous example. So let's go into the cons of M1 Finance. There aren't that many, but there are definitely some I need to talk about. Okay, so right now M1 Finance sounds like an awesome platform. You're ready to invest, again, using the link below. All joking aside, it's how I make a living, you guys. Just help me out here. But there are definitely some cons that we need to address. So the first one is that there are no mutual funds. So I mentioned this in the very beginning of the review. There's ETFs, there's index funds, there's individual stocks. There's a lot of different options to invest in. However, they do not have mutual funds. And that's okay, because with a lot of Vanguard ETFs, they're pretty much the mutual fund equivalent, just with maybe a slightly higher expense ratio. So this one isn't even that big of a deal, but just to be fair and balanced, I do need to talk about that. Second, the unintuitive desktop user interface. So I take this with a grain of salt. When you're first starting on the desktop, it may be a little bit confusing as to how to buy stocks and add them to your portfolio, but once you learn it once, it is easy. It's super cake. You don't have to worry about it. At first, I was kind of confused as to how I'm adding slices and how I'm adding stocks to my portfolio. This is something I needed to mention up front, but once you get used to it, it is super easy. The third is that there is no tax loss harvesting. So if you're used to like a Betterment, so first let me explain what tax loss harvesting is. Tax loss harvesting is if you're using a robo-advisor, and you don't even need to use a robo-advisor, but most robo-advisors perform this. They'll take basically investments that are losing you money and knowing when to sell them. That way you're optimizing your taxable capital gain or loss for that year, ultimately saving you money in taxes. It's basically asset allocation, but in terms of taxes, okay? And if that wasn't a good explanation, just Google it. And then fourth, you have manual rebalancing in taxes. The reason I wanted to talk about this is because if you hit the rebalance button, which I'm going to show you in the live demo, it's going to automatically rebalance your portfolio to your target weights, and that may cause a taxable event because they may sell the stocks that you have a capital gain on, and it may actually sell stocks that you may have a capital loss on, but it shouldn't. It meets all those target weights that you're going to set. So say, for example, you bought Amazon at, just for easy numbers, $1,000, and it went up to $1,300, and it's out of weight in your portfolio for your target. If you hit rebalance manually, which I advise you do once a year anyway, so things don't get out of whack too much, it's going to cause a taxable event because you're going to have the capital gains. You bought it at $1,000, it sells for $1,300, you have a capital gain of $300, which is a taxable event. So if you don't hit the rebalance button and the shares are underweight, there is no tax. M1 Finance is automatically going to rebalance. If you sell, the overweight slices are going to get sold, which is a taxable event, which I just mentioned. And then if you hit the rebalance button, sales will be made, which is a taxable event. So I'll show you that in the demo. It's going to make a lot more sense here in a second. So without further ado, let's get right into it. Hey everybody, thanks for joining me in the live demo. Real quick, I'm just going to fly through this platform. I'm not going to take too much time and go into every nuance. Again, if you are looking for the free training or something that's more longer format, check out the free training link down in the description below. And also, again, if you feel like signing up for M1 Finance, I hope this review helped. Please use my link in the description below. Again, I will receive a small commission if you do that. So very quickly, let's fly through this. When you sign up for your account, you're basically going to give your information, you're going to link a bank account, and you're going to make your first transfer. However, what they want you to do is to create your first pie. So this is my actual SEP IRA retirement account, and I will be turning this into a weekly series where I actually pick different stocks that I want you guys to vote on, and the stock with the most votes and the most compelling arguments from you, I will actually purchase that at the end of the week. So I'm going to run a poll on the community settings of my YouTube channel on a Monday, and by Friday I will purchase those securities with the highest votes and the best logic behind them. So I do want to get you guys involved. With that being said, I have basically $230 a week going into this, which is the equivalent of roughly $1,000 a month, which is the equivalent of $12,000 a year. So this is my pie. Again, you can have as many pies as you want, but this is my retirement account. I only want one pie, easy to manage, very simple, okay? So these are all the individual slices within my pie. So you can see here I have Vanguard real estate, I have Vanguard dividend appreciation, I have long-term bonds. These are the actual representations of the pie, and then there's my target weight. So my target weight is what I would like the slices to be at. The number down here is what they actually are, okay? So I'm going to actually introduce my little series in a different video, so I'm going to spare you the time here. But very quickly, you can see here that you have a buy and sell button, you have a rebalance button. That's what I was talking about with the tax loss, or excuse me, the capital gains and the taxable events. And then also you can edit your pie. So when you click edit, this is where you can actually edit the different percentages, and you can see that slice getting bigger, smaller. You can add whatever you want. So you want to add a new stock, there you go. You click add, and boom, you can search from all these different securities. So very quickly, these are the different funds they offer. These are all institutional grade funds. These are all your pies. This is my retirement. So that series is going to be me trying to build a dividend income portfolio that pays me $1,000 a month passively in retirement, and this may or may not be a Porsche 911 fund. We'll see. If I can afford it, great. If not, no big deal. These are the expert pies I was telling you guys about. You have general investing, you have planning for retirement, you have responsible investing, income earners, etc., etc., etc. So if you click into income earners, for example, they give you all these different expert pies with the number of holdings, the dividend yield, the performance over 1, 3, and 5 years, and then you also have the risk level. So if I click on global dividend, this is their expert pie, and you can actually look at exactly what this is investing in, the different slices of this pie. Now, if I really like this pie, I click add to basket, there's global dividend, add, boom, and now you can actually have this as a slice of your own pie. If I wanted to add this expert pie as a slice within my own Marco's retirement pie, you can do that. Easy peasy lemon squeezy. So you have spend, which is what I was talking about with the debit card, which earns 1% cash back. The checking account earns 1.5% annual percentage yield, and then it's also FDIC insured. You have borrow, which is a minimum of 10 grand in your portfolio. You can borrow up to 35% of your individual or joint portfolio, at a rate of 3.5% or 3.25% for M1 Plus. Then you have the research tab, which I just showed you. You have market news, stocks, funds, etc., etc. And that's pretty much it. It cannot get any easier than M1 Finance, and this is why I absolutely recommend it for beginners. But let's go into the Marco score and see what score I ultimately gave this. So if you can see the screen right now, I reviewed Betterment in the past, I reviewed Fundrise in the past, now I'm doing M1 Finance. From a commissions and fees standpoint, this is a no-brainer. It is literally free. That free actually means free in this case. It's kind of crazy. Customer service, I gave it a 7 because I did email them a few days ago to delete one of my individual accounts, and it's been about 3 or 4 days now, and that still has not happened. So I want to give them the benefit of the doubt, so I'm going to give them a 7 in this regard. Ease of use couldn't be any easier once you figure out the actual platform and how to use it. It's cake. It really is super easy, you guys. Tools and resources, they give you a lot of good things with news, categories, descriptions, charts, and you also are able to invest whatever you want. Edit, charts, and then the investment options. The only reason I gave this an 8 is because mutual funds are not able to be invested in with M1 Finance. Asset allocation, it's an 8.5. Very simple with the expert pies, a lot of diversification, a lot of different things that you can invest in, and a lot of different ways you can do that. The flexibility of the slices and the weights and all that stuff and the dynamic rebalancing, I decided to give this an 8.5. So ultimately, the Marco score is at a 51.5, putting it in second place. Fundrise is a completely different animal. This is not stocks. This is real estate, so that doesn't really matter. Betterment did edge it out, even though I think that Betterment was my first review. The main differences were that it had tax loss harvesting and that the investment options were a little bit better. And then the customer service really did edge it out. However, from a beginner's investing standpoint, I actually like M1 Finance better than Betterment because Betterment, you can't really pick your own investments. With M1 Finance, you can. So I may need to revise a couple of these scores here. So that's pretty much it, you guys. I know this was a longer review. If you stuck until now, please use the link in the descriptions below. It really helps me when you do that. And as always, have a prosperous day.